Welcome back to another roundtable session hosted by Furlough. This week we have an Investors Roundtable, Pathways to Profit, where we'll be diving deep into the topic of investing. Hosted by Rosalind Fons, an incredible email marketer and founder of Furlough. And she's brought with her a great cast of speakers. Owen Robert McGregor, also known as Rye, financial consultant of AEI Financial. Ori Bogdan, founder and CEO of Vay Labs. Sean Weisbrot, founder and CEO of We Live to Build. Fear Gedult, four-time startup founder and co-founder of Furlough. Now, get ready for an incredible discussion that will change the way you approach investments and hopefully skyrocket your success. So, let's jump right in. But before we do, let's cover some of the questions. One, what are some common investment options available to agency owners? And how do they differ in terms of risk and potential return? How can agency owners assess and manage investment risk effectively to safeguard their financial interests? What resources or methods do you suggest for agency owners conduct thorough research and due diligence before making investment decisions? Are there any strategies or best practices you recommend for diversifying investment portfolios to minimize risk? This event, as always, is sponsored to you by Fidgetal.wtf, and all replays are available at furloughtv.com. This session is originally streamed to a live audience every Wednesday at 2 p.m. Eastern Time. And last but definitely not least, don't forget to join our community of entrepreneurs and marketers in Discord. It's discord.gg/furlough. The investment member roundtable starts now.
Hello, great to see everyone. It's Rosalind here. I'm going to kick off our discussion today, but in the meantime, definitely let us know if you have any questions on investing, no matter how big or small. This session is for you guys, and I want to allow you guys to get as much out of it as possible. So definitely take advantage. Now, I'm going to start us off. There is a massive pitfall that agency owners tend to fall into. It's very unfortunate. Agency owners, they'll work to build up their client base and it'll start gaining traction. They'll get a couple of whale clients, but then inevitably one of these whale clients leaves. Now, you know what that means. It means it's a panic because you might be down like 50K a month. You'll be wondering how to pay staff. It's very stressful. I don't know about you guys, but having an extra 50K on hand randomly is quite a feat. So my first question for the panel today would be, at what point should agency owners look to actually start investing in other avenues to mitigate risk?
It's very tough to be in this spot where you send labor, right? Because every time you have a labor gap, you're losing money and you need to keep paying salaries and hold the team. And then you start chasing after customers. So I would say, first of all, vast majority of the agency owners I know are not like you, Sean. They will always ask for like passive income channels where it's going to be like crypto or stock exchange or other businesses, or just investing in SaaS is very popular between business agency owners. Starting an e-com business like that is very common just because they want to get out of the labor loop, that I'm setting hours and I need to constantly bring work to the team to sponsor. And the moment I'm losing a team member, I can't sell the services, right? Because I don't have out to fulfill. So it's a deadlock. I would say you want to push for investments fast because this time is coming to every agency, no matter what type, what size, this stuff is coming. And secondly, you want to create revenue sources that are self-dependent, that are evergreen, that you can rely on and build a company on, because services is just tough. It's tough for a long run.
Usually you invest in labor as an agency, and once you get a good spot, you could obviously pay out dividends to the owners, which can be split by profitability. I mean, there's no like pure formula to this. As Ophir said, like investing in other vehicles, crypto is great. Anything that feeds you passive income. Even Ophir and I were in talks of like potentially getting a piece of real estate that can be converted into an event space. Obviously, Miami, Florida, real estate's great. So just figuring out where you could invest. But really, I do see a lot of these agency owners actually just using their agency services, building out some sort of SaaS that they actually use towards their clients, and then eventually making it more of a consumer facing SaaS products. There's no perfect way or right way, but I mean, there's definitely ways that have shown success to agency owners. And generally I see a lot of agency owners on the same track. So it usually leads to one of those things.
I think it's inevitable for agency owners to come across financial pitfalls. So just being a bit due diligent in terms of investing, I think it's better to do it earlier, or at least to think about it earlier. We do have a comment from her on LinkedIn. I have a broad question about investing as a whole. Some people say you should start investing as early as possible, stocks, options, crypto, etc. And others say you should focus on the main business and put all the money in it. So I'm guessing he's wondering what he should do.
So there is a very interesting kind of way to think about this. Einstein has been once quoted that the most powerful force in the universe is the power of compound interest. The longer you allow for interest to compound on itself over a long time, the more powerful it gets. For example, difference in 5 years when we talk about very early on, it's like the difference between, let's say, a 20-year-old beginning to invest versus a 25-year-old. While that might seem like a very small gap, the payout, if we're considering the average savings rate of a US citizen saving usually around about 10 or let's say 15% of their paycheck over that, just that 5-year difference could result in a difference of about $3 million. So you can see how that really compounds over time.
So we go to the next question, which is from Zane, another LinkedIn question. For splitting up profits when it comes to agencies, what percentage gets invested into labor and what percentage goes into growth opportunities?
I would say half. I would say at least half goes to labor.
At least
At least, yeah. It's like you're a service-based industry. Who
if
goes
you
to
don't
service?
pay more than 50% of labor, like if not more than 50% of your expenses labor, your agency is so profitable just to invest in acquiring new customers. Like if this is the scenario and you have more than 50% benchmark of revenue, it's too good to be true and scale it.
If you have someone that came and funded the agency and just gave you some startup costs, then you're probably not going to get any dividends until they get paid back their original investment, right? If you have partners that are not 50-50, then does it necessarily mean that every time you pay an owner out that it should be 50-50 or not? It really is case by case. No one can give you a blanket experience thing on that, but I could tell you if you're Rawson and myself are all partners in the agency and like Rawson, have you ever asked
No,
for more money?
never. Never.
But how many times have you gotten compensated from the company you own
A
that
lot.
it's just increased, right?
Yeah, a lot.
Every time period. And the reality is like in our agreement of all of us, it's like when there's money in the account, we're going to pay people that are strongly a part of it. And it's not a question of everybody on our team, I think deserves and more money. It's just there is no more money. But when there is, like, how does that get split to keep everybody happy? It's something that we address as like in real time, but we do have some ideas from the discussions prior, like when we're anticipating that.
What would be some of the best investment options that are open to agency owners? Do you guys have any specific avenues?
I think it depends on your risk profile and how much you have available. When I was younger doing that business, in the very beginning, put 100% in crypto, and I was very happy with the results, and then I looked for what's something I can invest in. I looked at a property, I looked at an e-commerce brand, I looked at different types of things. I looked at gold, made a lot of money with gold. I had bought gold at 1250 a few years back and sold it at 1850. I sold it like 2 years or so ago. So I made like $600 an ounce profit on gold I was just holding it for 2 years. It was an incredible time to go in and out. So it depends on your risk appetite and how much money you have available. I think if you're looking to buy something that can produce passive income, then real estate is great. You need to be able to have a certain money to be able to purchase something. Obviously, the more you can afford, potential higher return you can have. But again, it depends on what you're doing and what your risk appetite is and whether your goal is to live there.
This is stray back on the agency side because this agency investing is very unique. And I think naturally everybody slowly goes into the real estate side just because I think agencies can make you a millionaire, real estate or private equity is probably going to make you a billionaire. And I would say like acquiring either SaaS or ecom because you want to leverage, like it's very easy to get your money and buy crypto, but what does your resources of agencies, like of manpower and services and like being able to amplify your real estate position or your crypto position? It's not like you're going to go market Ethereum, right? So using specifically for agency owners, I think playing strengths is an obvious one. And if you're an incredible email marketing agency, you can go on Flippa, do your due diligence and find a brand that you can inject your agency resources, scale the revenue, which means it's now valuated at a much more and flip the store that you got. So you can do some type of things there. You do not necessarily, people think you need to invest your money. Like you can invest your time. Time is money.
you have to know what you're going for also, because you're talking, I've just been listening, we're talking, but everyone's talking about where to invest and like what small amounts to invest. If you're investing like under 100,000 or under 10,000 even, or like whatever, like a small amount, which people are asking about, then it's largely irrelevant if you're going to invest in anything like, or you're getting a small piece of the pie. It just doesn't really matter. It can go up double and you make $2,000 from $1,000. Okay. But if you own 100% of something and invest $2,000 into it and then grow the value of that, then you can have a lot of equity value. Like in our case, like we invested, like for my company, we invested less than $100,000 into it over a period of a couple of years without much change in revenue. We're still able to raise at a near 10 million valuation with no really pre-revenue. So that value to me is a lot more interesting. And then also it depends on what your goals are, because if you're not trying to, like if you're just trying to retire early or something, or just buy a house, then okay, that's maybe it makes sense for you to focus on compound interest and invest from 20 in safe blue chip stocks and then just wait till you're 40 and then hope that the value out of it, the market doesn't crash.
So obviously when we develop statements of advice, like one of the two core parts are like a points of contention, usually when it's drafted up in, let's say, investment policy statement, is usually one, like what's the two objectives? And then the two main objectives is what's the expected or what the target rate of return that we're trying to achieve and what the constraints around that. And then also what's the targeted risk profile that you're trying to target. And then there's also special kind of considerations. For example, if you have like a religious or some type of ethical background or consideration, that some investments might just be completely off the table for you. So I would want to probably suggest this to people is look for businesses with potential increases in profitability on like operations. Looking for things with like, hey, the margins could definitely be improved in this kind of business. That's not against not investing in it. That might make it a good target because it's like, hey, you're spending like the operation margin here is actually, when you really dive into it, it's like, hey, that could be really improved. Like they're paying for some software. There might be a few like tens of thousands of dollars. And it's like, you really need this kind of stuff. We could just do this in-house, make it ourselves and save us all this kind of costs. So that's something I'll at least want to consider.
It's
Guys
not
wanna
really that
flex?
at all to me. It's like
I
there's
could
so many different
flex.
industries, right? I have a friend that is doing, I think, 1,000 a month and just raised at a 30 million cap, doing 1,000 a month in revenue as a SaaS business because he's a second time founder. And it's not that, like, I don't even think what I did is impressive. Like, it's impressive. It's all subjective, right? Or relative to other people. Like, for me, like, I'm 20, I just turned 27. Like, by the time I'm, then I want to have been in a couple other companies raised at much higher valuations, much higher amounts. So you have to consider the industry, but then also consider, like, are you a first time founder? What do you need the money for? What's the economic environment? Because like you obviously raised like in the worst environment, and we probably would. I didn't want to raise this much, but we ended up raising more because we realized it'd be tough to raise. If we didn't raise it now, then there's a chance we can't raise in like a few months from now. For me, I'm going to invest in myself. I'm not going to invest in stocks. I don't care if my stock was up a little bit or whatever. I don't care about any of that stuff. I don't care about passive much either. I'm all on the equity play where I want to create real equity value for my shareholders and myself. Ideally, investing in myself more if I could. Like, I've always said, like Elon, what he did right after PayPal, he did like $180 million, like 100 million into SpaceX, 70 million to Tesla, like 10 million to some other, and like he owned majority of those companies as a result, and now he's the richest person because of it. And I think that if your goal is to be just like as connected and powerful and whatever influential as you can be, then private equity or VC route, investing in yourself and being a founder, I think is the best way to do it. If you're an agency owner or whatever, and you're trying to just get to a passive income or get to an exit or get to retirement, that's a whole other question of, okay, if you make $5 million, most people can live off $5 million the rest of their life if they want to. Maybe not super luxuriously. If they get 20 million, they probably can live pretty luxuriously. Depends on where you live and everything, right? But for me, 100 million really wouldn't phase me.
No, I know that your motivation is definitely not money. That's what I remember.
Yeah, being a billionaire is about having money. It's about having like influence, right? Doing what you want to do. That's what I want to do.
And with that, we are coming to time now. We will be back next week at the same time with an episode all about management. So if you want to have a business, if you do have a business, this is definitely one to attend. There'll be a ton of helpful information because I know that management and managing people, it's not the easiest. There's a lot of mistakes that get made, unfortunately. And even if you're not making a mistake or you're not trying to make a mistake, it happens. So definitely pop along for that one. And with that being said, thank you all for popping along and listening to us and joining in on the chat. I shall see you soon.